What's going on, guys? John the Economist here, coming at you with yet another market update. A lot of things have happened, right? We've had FOMC, we've had some major earnings, inflation report's going to be coming out soon, jobs report came out, and Bitcoin's rallied quite a bit since my last video. So I thought I'd kind of just come up here and share my thoughts on how things are going. Let me make sure I'm grabbing the right Bitcoin chart. Yep, let's do it up. So first things first, the U.S. Federal Reserve is going to be raising interest rates point or 25 basis points, aka 0.25%. I don't know why we use different jargon for it, which essentially means that their interest rate raises are slowing, and they still continue to raise rates, but we can expect the next, 2 to 3 raises that they do in the coming months to also be 25 basis points, which means that the terminal rate is not too far away. In fact, the treasury yield is once again beneath the interest rate, and most people suggest that, like, for intensive purposes of actually bringing down inflation, this is generally where the terminal rate has been reached in the past. So they might only raise 1 or 2 more times for all we know. But if you look here, right, inflation keeps coming down, and they're going to keep raising rates because of the fact that they don't want to see it do something like this and then do something like that, which is kind of what happened in the 1970s. They'd like to see it come down to that 2% and chill out and hopefully never return again, right? So that is why they keep raising the interest rates. I don't know if this is updated yet for February. Looks like it has. Cool. So you can see, right, we've talked about how this is pretty significant just because of the fact this is the first higher high that we've had on the effective federal funds rate since basically like modern monetary theory was a thing. We've done nothing but, raise interest rates, yes, but never raise them higher than they were in a previous business cycle. You can kind of see how this peaks out, right? Fought inflation in the 70s, had to raise them higher and higher to get inflation down, but ever since then, it's been a downtrend. And now, for the first time in like 40-ish years, we're actually raising interest rates higher than they were in the previous business cycle for the first time in a long time. So all worth looking at because of the fact that we've had our 3 factors that we've been following, right? Inflation has to come down, the Federal Reserve needs to stop raising interest rates, and the United States dollar currency index has to come down. Federal Reserve is almost done raising interest rates. We know that to be a fact based off of Jerome Powell's statements that the end is like in sight. I shouldn't say the end is near. It sounds really dark. This is actually a positive thing. They're going to stop sucking liquidity out of the economy relatively soon. Again, how much and how soon, we don't know exactly sure, but we can probably say sometime in Q2 is when the terminal rate will be reached. We already quickly took a look at the inflation rate. That is coming down sustainably. So inflation's coming down. And then the thing that we haven't looked at yet is the dollar index, which is the weekly chart. Yeah, it's coming down, right? And the thing is that even though we've used these indicators to kind of say, yep, these things need to happen for the next bull run to be primed, we're already getting a front run in price. And I'd actually argue that the market's getting a little bit too excited, right? Because the market has looked at these 3 factors that, again, we've been tracking for about a year now to say, hey, these are the 3 things that we need to look at. When these things start going in the direction that we want them to, we can start suggesting that a bull run's coming. And obviously, you take a look at the Dow right now, pretty great recovery. We're up about 18% off of the lows. Do the same thing for NASDAQ, which, considering the tech bubble, it doesn't look quite as impressive from a chart perspective, but we're 23% off of the lows. And then you have the S&P, which is breaking out of this trend line that everybody's been watching for months now, and it is also about 20% off of the lows. You can also take some blue chips, which most of these blue chips actually just had earnings reports about an hour after me filming this video, and they missed earnings. We'll talk about that a little bit more in a bit. But regardless, once I get this deleted, Amazon is 37% off of its lows. Google is about 30% off of its lows. They had a missed earnings report. Apple's about 21% off of its lows. They also had a missed earnings report. And then, Meta's kind of an interesting one that everybody's talking about because it had a very bullish move. I believe it's like, yeah, it's like over 100% off of its lows right now, which is very interesting, right? Because that was quite a capitulation. And I don't know if they had earnings today, but regardless, right, we're seeing a nice bounce in equities, and it's not just in equities, right? We're also seeing it in crypto. Mostly Bitcoin. If you actually take a look at Bitcoin dominance, which I think I have somewhere in my charts. I need to clean this up really badly. I have way too many things in here, right? Um, Bitcoin dominance has been trending higher. And if you actually exclude stable coins, this blue line here is not a downtrend. It's actually an uptrend, suggesting that, Bitcoin's getting bought up versus the rest of the altcoin market on a pretty regular basis. But taking a look at that, right, if we take it off of Bitcoin's low, we are at about 54%, which is sweet because I was buying down here and there's videos saying that I've been buying down here. Um, so now I can also be as transparent as possible and say that I sold a little bit in like the 23 to 24K range recently. It's because we're in a bull run and we're back to trading a little bit. My macro outlook for Bitcoin is that I don't know, 1000% that the bottom is in, but I do know that I really like where I bought some stuff. I was up in the ballpark 50%. And so I am going to take some profit and wait for Bitcoin's price to deflate a little bit once again before re-entering those profits. That's how you make a little extra money here and there when you are willing to take the risks to do things like that, which again, not financial advice. Invest at your own risk and trade at your own risk always. But the reason why I want to talk about, okay, like maybe some things are getting front run here, the market's getting a little too excited, is because there still is a lot of macroeconomic uncertainty. Again, corporations are missing earnings. The tech sector is definitely not fully bounced back yet. In fact, they've done layoffs in the tens of thousands, including, blue chip stocks with really strong financials. So these are all things to be aware of. And then when you take a look at, this formation from a technical perspective, what I see is higher highs on price. And actually, we'll switch this to a line graph so it's a little bit easier to see. I'm seeing higher highs on price and lower highs on RSI. This is called a bearish divergence on RSI. What that means is that even though price is trending higher, the momentum in the moves of the price are trending lower, which means that there might be less momentum to push these moves up, right? The reason why we got really excited out of this move that, printed a new high and kind of are, we don't want to get excited here and say it's setting a new bull run in motion, but I'll take 50% as a pretty bullish thing, right? Like I had 50% more money on those buys than I did when I bought them. I don't know if you want to call that bullish or bearish, but generally making money is bullish in my book. But when that happened, you saw a nice spike in volume, right? And not quite the same as, the capitulation, but you had a nice spike in volume. And now if you see that volume has been steadily declining as we've kind of reached these new heights. So we're also losing momentum from a volume front. This is even more obvious to see if you go to the 4-hour chart. I'll switch this back to candlesticks because it's a little easier to see that way, right? RSI has been consistently going lower, while price, right, has been trending higher. Again, bearish divergence. And these divergences are especially important, bullish or bearish divergence, when RSI is either overbought or oversold, right? So coming out of overbought or coming out of oversold, if you see a bearish or bullish divergence, like again, this isn't predicting the future and suggesting what for sure is going to happen, but generally it's a pretty reliable indicator. So that's something to consider, right? Maybe there's a chance if we switch to the weekly chart and we add in our moving averages, we get a pullback to the 20-week, right? Because we blew right through it, and now everybody has their eyes on the 200-week moving average, 25K. What if we have to wait a little bit to get there, right? What if instead this curves back down and we end up in the 20K range for a little while we build support off of this major moving average that is usually a really good indicator of whether or not we're in a sustained bull run or in a sustained bearish downtrend, right? So it's something to consider. While everybody's excited and everybody's really happy about the 50% move in crypto and the 20% plus moves in equities and all these other things that are going on where a lot of money is getting made, you also have to kind of tape your expectations and say, look, we've never been sustainably below the 200-week moving average. So this is probably going to serve as some pretty strong resistance, which probably means that we're not just going to hit it and blow through it and keep going. We might flirt with it, or right now we might not even get there, and then we'll start coming down and building out a support base before working our way up again, right? Take out some of the late longs in the system. The other thing that's worth looking at too is and you can't call something what I'm about to call it until after it's confirmed, right? This is not something you really trade with. It's something you kind of notice after the fact. We might be looking at what's called a swing failure pattern, which what that means, and I'm going to go to the example that I had of a swing failure pattern from a couple of years ago, or about a year and a half ago now. This is a swing failure pattern. So this is to set the stage a little bit. This is September of 2021 that we're currently looking at here. And what everybody was concerned about in September of 2021 was breaking a resistance line that looked something like this, right? We're all waiting to break out of that resistance. I think people kind of drew it from this spot, when we fell down. Gosh, it's so funny, like going and looking back at previous support or resistance you had drawn up from previous trading days, because the support and resistance don't really matter all that much right now, especially the more time that elapses, the less that it matters. But we were kind of in like this box. And so what a swing failure pattern is when you have a false breakout, you can call it a bull trap, you can call it whatever you want, and then a downside move, right? So everybody had their eyes on that, like, what was it, like 50K, 49K, somewhere around there, right? Everybody had their eyes on that price level. And then we saw a pretty much like a 72-hour move out of that price level. Again, even if you look at how these candlesticks look, right, they suggest that the momentum is to the upside. So all the people that watched this resistance get broken started going long here, which means they started buying here with the expectation that it was going to keep moving up because we made it past that resistance line. And then they were very wrong, right? And instead we trended down for, I think, like 2.5 weeks. If you actually switch to the weekly chart, oh goodness. If you switch to the weekly chart and you add in that 20-week moving average again, we actually broke out, came down and tested the 20-week moving average of support for about 3 weeks, and then started moving up again, right? But my point is that there's that swing failure pattern that happened before that move to the upside occurred. Now, if I go and look at this move, right, you could kind of say, especially based off of, yep, this is what I'm looking at right here, right? Let's say now this, as soon as, yep, that is a horribly drawn line. Let me get that fixed for y'all. What if this is kind of the resistance line you're looking at? Or maybe this is kind of the resistance line you're working at, right? And sometimes I like to draw boxes rather than lines so that those things are a little bit easier to see. But it's only easier to see if I can do it in, like a time frame that isn't, right? Like what if this is the general range of resistance that people are looking at right now, right? What I'm seeing potentially that could happen, especially because of the fact that we have a lot of people looking at $25,000 as resistance, is that we break out and then come back down. And what do? Switching to the weekly chart, going to the moving averages, we come back and test the 20-week or so moving average, which currently is at about $20,000. So that's kind of where my head is at. And personally, just based off of the macroeconomic environment, based off of the Federal Reserve, based off of potentially companies having better earnings outlook, us not having like this crazy horrible recession that everybody is projecting, right? Maybe the recession's not as bad as everybody's thinking. What if we come down and just form a base for a few months before then moving up and taking off on an actual bull run, right? So that's kind of where my thinking is at currently. Again, this is just a short time frame trade that I am making. It is no indicator to like my long term aspect or viewpoint on the market. I think long term we can kind of expect 2023 to be a sideways kind of up year versus 2022, which was obviously bearish pretty much start to finish. I'm feeling a little bit more optimistic about a uptrend, a bullish trend in 2023 at some point. I just also am trading, and because of that, I took a look. Right, I bought here on this candle, and I bought here, right? And so just taking the average of those guys, like in this general area, potentially I'm up about 45%. So why wouldn't I go take some of those profits on the table off the table and then wait for potentially a reversal so that I can then re-enter that money, right? So that's again not telling you what to do. That's just currently what I am looking at right now in the crypto market. Um, and if we come down and we test that 20-week moving average of support for a few weeks and then we start moving up from there, I will be outright uber bullish, right? Tossing all of the cash that I have sidelined currently into Bitcoin and letting that baby ride for, however long it's going to ride for until indicators start telling us something different. That tends to have worked out for me in the previous times that I've done that. That's how I tend to trade it. I prefer to do more long-term stuff. I don't intraday trade. I trade, kind of these bigger swings that last a couple of weeks, and you just have to be patient, be okay sitting on your money a little bit, right? So, is my actual day that I sold was here on the 29th, I'm pretty certain. So it's actually been 5 days and we've actually been in the same price range that I sold. So, like some traders get kind of nervous when they see that and they start to lose conviction. They're like, oh, are we going to go higher? Did I make a bad move? Should I put my money back in? Did I mess up? Right. And look, there's a decent chance that that trade doesn't work out for me. And but until that happens and there's an invalidation, which invalidation to me is like, breaking past 25K and heading up to this range, right? Then there's nothing to worry about because I expect it to correct a little bit. Usually, after over a 50% move, things do kind of come down and test their previous supports a little bit before getting the confidence to move up again. So, I'm sorry to be super lengthy on explaining that trade, but I think it's a good thing to take into account that's like, hey, it's way easier to trade in an uptrend than a downtrend. Because downtrends, you're just kind of protecting the money that you have rather than making more of it, right? Like I'm happy when I trade up in a downtrend well because I don't use leverage. I'm happy when I trade it in a downtrend well where I sell here before it, goes down and then I re-enter there. And like on paper, I accumulated more Bitcoin, which is a win, but I'm still down, quite a few percent. And so that's the crummy part about trading in a bear market is that you actually don't see like the fruits of your labor until we're back in an uptrend. Uptrends are great because they bail you out when you're bad at trading, right? If you suck at trading, uptrends will kind of cushion those mistakes a little bit. So it's best to kind of learn how to trade, you know, um, when there's times where your mistakes can get bailed out and you're a little bit more comfortable with it. Because trading in a bear market, it's hard. It is really hard. This was probably the first like long year long bear market of my lifetime that I personally experienced, and right because I um started yeah, I started investing and trading in this area right here, right? So my entire life, for the most part, has just been getting bailed out, right? This bear market didn't really count. I traded that okay. But like, it's one thing to be in a bear market for a summer. It's an entire another thing to be in a bear market for a year or over a year, really. So, anyways, that's pretty much all I got on this. The point is that yes, our indicators are telling us what we want them to as far as a bullish uptrend goes. Yes, the macro environment isn't quite as scary. Yes, a lot of equities and crypto have seen some pretty sizable gains as a result of the two things that I just mentioned. But let's taper expectations. Let's wait for potentially a pullback to happen because things just don't go straight up for, months on end. That's very rarely the case, and you will have buying opportunities if you are patient. So again, not financial advice, but after a 50% move, I kind of have my head on a swivel a little bit. So hope you guys have a good one. I will see you all next week. Hopefully, like somebody hold me accountable to this, not just with like a general market update, but actually going into some of the economics research I did in my master's that I just recently finished. I'd really like to kind of dig into some of that stuff a little bit better. And maybe I'll just do one that I can do off the cuff a little bit better because my prep time for these things has been very limited with my work schedule now. So, um, you're busy with one thing, you get free time, just get busy with another thing. That's kind of what happens. But if it's your first time watching, make sure to like and subscribe and comment and all that stuff. I'm sure you can clearly tell it's a small channel, so it'd mean a lot if you help me out. Thanks, guys. See you next.